Our view here is we're really happy that Bob's back. We upgraded the stock the day he showed up. The tone shift is obvious, and that lifts the multiple. In terms of your earnings question, when the numbers start really inflecting to a better position, it's probably 2 years out, right? You'll get some cost cuts on SG&A, but the real question is spending on content and a reallocation of that spend. And that won't be immediate, to David's comment. It's going to be a 2025. In our view, that's the real question, is earnings power here, right? And most people didn't really change numbers in the near term, and we still want more details, right? So we got a great tone shift, a strategy shift. But in terms of numbers changing and the real acceleration of earnings, that's to come, I think, right? So our view is we raised our price target to about 130. We still want to know more about the earnings power of this company. They used to do 10, 11 billion of free cash flow. They're doing $1 billion last year. So that's to come. And our feeling is with Bob there, even the next 2 years, we'll have more confidence about the 25, and then post 25 earnings power. So I don't think anyone's getting out of the stock now. It's just starting the story to kind of rebuild. When Bob got there in the first time, he drove earnings above and beyond what we all thought they can do at Disney. So that's what we're looking forward to, how the reorg really drives long-term earnings power here.
In terms of the path to profitability for the streaming business, the comments we got from Iger this morning on Hulu, I mean, he didn't rule out the possibility that Disney is going to let go of its ownership stake in that. I want to get your thoughts on that.
Yeah, we don't know who the buyer would be, right? It would be great if he would sell but then what does he sell? Does he sell the rest of the television production company? Our view is that Gen Entertainment, and David was all over this with Bob, is a harder business. Bob acknowledged that. We always thought the Disney Plus strategy should be playing to the superfan, the core, and the further away from that is a harder business. We've been thinking for a while, Hulu fits better someplace else, but there's not a natural buyer for Hulu. What we see in terms of a challenge for growth, we wrote this piece last night and saying, look, there are challenges here in DTC. Growth is one of them, but I don't think Hulu has a natural exit path right now, right? They're going to have to basically nurse Hulu to faster growth, better profitability. For the time being, I see it staying within Disney. I really do.
Yeah. Okay. So just to stay on the streaming portion of our programming here with another question. Is this a shot across the bow to the broader industry in terms of this shift towards profitability from subscriber growth?
Without a doubt, Morgan. This has been the tone change that we've expected and we wanted, right? Chasing subscriber growth for just the sake of making Wall Street happy was a dumb strategy. The previous management didn't have the courage or the intelligence to change that strategy. David Zaslav has already pivoted that way. We'll see what Paramount says. Comcast, your parent company, is losing a fortune. The market's moved past just counting on subs. The problem is, though, if you're not scaled at this point, Netflix is scaled, Disney scaled. If you're not scaled, then how do you get to the other side, right? So we're not saying that everyone's going to win here. We think that this third act, as we've been calling it, separates winners from losers. Netflix and Disney, Amazon have scaled. Everyone else is going to have to figure out what to do next to get there.
Yeah, your note's even titled "Welcome to the Third Act," Michael. I guess would you agree with some of the response to today's news that, or at least the print, that it only reinforces if everyone's getting disciplined, but you're still looking for scale, it reinforces the Netflix long thesis, and that's about it?
Yeah, so we're neutral on Netflix. Our tone shift has been the past couple of months that in this third act, when everyone becomes more conservative, the winner, the incumbent wins. And that's what's going to happen here, right? The wild card's Apple and Amazon. But if all of a sudden the spending wars go down, people stop spending the way they were spending and just giving away subscribers, the incumbents win, right? So I think what Disney is doing is following Netflix's lead and saying, look, we're going to slow spending growth. We're at a plateau now in terms of how big we can be. We'll drive pricing. And I think the winners win. I think you get that separation the next couple of years. I really do.